U.S. indices sit at extreme highs. Before we start, a quick word from our sponsor. This video is brought to you by XNS, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The Nasdaq 100 has been fairly quiet in the early hours of Thursday, which makes quite a bit of sense considering that Friday is Non-Farm Payroll Friday. With this, I think traders will probably be a little bit cautious, especially considering that the market has shot straight up in the air for the last 4 or 5 days. So unless you feel like chasing the market, this is probably not the place to be a buyer. However, on a pullback, especially if we get anywhere near the 21,000 level, I suspect that there will be people willing to catch the market and play value. The Dow Jones 30 continues to hang around the crucial 45,000 level, and unlike the Nasdaq 100, we have worked off some of the froth, so I suspect this is a market that will be waiting to see what happens with the non-farm payroll announcement. Short-term pullbacks will have plenty of support at multiple levels. 44,600 is an area right away, but we could see support all the way down to 43,750. The 50-day EMA sits just below there and is rising, so I think from a technical analysis standpoint, that also has to be noticed as well. The S&P 500 is the only one that hasn't pulled back or gone sideways at all. At least the Nasdaq 100 was sitting still this morning, but really at this point, I think the S&P 500 has places to be. We are at the top of what could be potentially seen as a channel. So those of you who like to trade channels probably would be a little bit leery of this. But really at this point in time, that just sets up for a pullback. I think the 6,000 level probably ends up being a support level. And then, of course, the 50-day EMA. I have no interest in shorting any of the U.S. indices right now. I think they all are far too strong. So therefore, this is a situation I just look for that knee-jerk reaction to the downside after the jobs number and start taking advantage of it. And that, of course, assumes that we even get it. The markets, and this goes for all three, really aren't concerning at all until we break significantly below the 50-day EMA. My name's Christopher Lewis. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe to the channel.